It's the last business day of the week. Welcome to Business Incorporated, coming to you live from Lagos, Nigeria. Thank you for joining us. I'm Chimeze Obi Iwago. On the program today, China and France eye Gambian port upgrade to rival Dakar. Italian oil company Eni starts oil production from Sankofa field offshore Ghana. Plus, a look at a UN report examining the role of tourism in economic development in Africa. Let's get started now, and we're beginning off with the market, starting here in Africa and looking into South Africa. The stocks there continued to retreat as investors fretted over policy uncertainties, including the independence of the central bank. Looking at those figures there, which came in at intraday, the JSE index was down 0.95%. The Nigerian stock market was also in the red at intraday, down 0.41%. The market in Egypt is closed today for the weekend, but closed sunny side 0.26% on Thursday in a quiet trade as 16 blue chips advanced and 13 declined. Credit Agricole, Egypt jumped 6.9% in thin volume, and the investment bank EFG Hermes surged 2.9% from a 4-month low. Also on Thursday, Egypt's central bank raised its key interest rates by 200 basis points for the second meeting in a row. Kenya traded up 0.10% on Thursday. And in the Middle East now, markets are closed today for the weekend. However, shares in Saudi Arabia cement and steel sectors surged on Thursday after the government cut export tariffs, but Gulf stock markets were mostly weak after a slide in oil prices. Qatar's index fell 0.08%. 4 Arab states decided in a meeting in Cairo on Wednesday not to slap fresh sanctions on Qatar for now, but voiced disappointment at its negative response to their demands and warned of the possibility of further action against Doha. In Dubai, the index was down 0.47%, hit by a 1.4% drop in shares of blue chip Emaar Properties and 0.9% fall in paired Damac Properties. In Abu Dhabi, Dana Gas fell 1.4% after reports that London's High Court planned to hold a full hearing in September on efforts by the company to restructure $700 million of its Islamic bonds. The Abu Dhabi index was down 0.39%. Markets will resume trading on Sunday. Let's move on now to Asia, where the stocks there were softer in Friday trade after the weaker close stateside and as global bond yields rose. The Nikkei 225 declined 0.5% and the Kospi was off 0.24%. The Australian ASX 200 tumbled 1.07% with broad-based losses across all its sub-indices. Shares in Greater China were cautious. The Hang Seng Index was off 0.36%. On the mainland, the Shanghai Composite was lower by 0.22% and the Shenzhen Composite slipped 0.084%. I will move on now to commodities market, looking at the oil markets precisely, where prices fell by more than 1% in early Friday trade, with U.S. crude futures dipping below $45 per barrel as news of a rise in U.S. production added to earlier reports that OPEC output was also on the rise. Brent crude futures, the international benchmark for oil prices, were trading down 58 cents at $47.53 a barrel. U.S. West Texas Intermediate crude futures were at $44.95 per barrel, down 57 cents. News of the production rise outweighed positive sentiment from falling crude and gasoline inventories in the United States. Right, let's get back to Wall Street now, looking at the futures numbers, which of course pointed to a mixed open on Friday as traders awaited the key release of official job creation figures. The Bureau of Labor Statistics monthly employment report for June has just been released, as well as the average hourly wages data and unemployment rate figures for June. The economy is expected to have added 179,000 jobs in June, but analysts are more concerned about whether workers got a raise. The lack of inflation in the economy, wages and prices have been a worry to some Federal Reserve officials who have signaled they are willing to look past it for now. There are no major companies expected to release earnings today. Now, the all-important employment report for June just came out, and for instant reactions, now I'm being joined by my colleague at New York Stock Exchange, and that's Jill Maladrino. Good morning, Jill. Thank you very much for coming through. What's new with the job data?
All right, well, good morning. Right now we're looking at S&P 500 futures up about 8 1/4. So it suggests that traders were happy with the jobs report, as we were relatively flat going into it. 178,000 jobs were created for June versus consensus of, actually, no, 222,000 jobs were created versus consensus of 178,000, with significant revisions to the upside for prior reports in April and May. So that is a good trend, and that suggests that the Fed will potentially stay on path, which seems to be what traders are bullish on. The unemployment rate came in at 4.4% versus consensus of 4.3%. The key piece of data here is wage growth that came in at 0.2%, and consensus was at 0.3%. This is really where the concern is for me. We're not seeing an uptick in wage growth, and that significantly hinders consumer spending. And we're seeing that translate into retail, for example. That's a sector that's been under some significant pressure. So I'm interested to see really what comes out of this as we get more details on the data. But I think for right now, that's what we're going to be focusing on as the market participants digest this employment report.
Right, Jill. Trump was in Poland yesterday and, of course, in Germany now for the G20 meeting. How have the markets been responding to Trump's second overseas visit since taking office?
The G20 summit begins in Hamburg, Germany today, and heading into the meeting, there's a sharp contrast in policy with a heavy degree of trade skepticism from the Trump administration compared to the expected announcement of the new EU-Japan trade deal. Steel is a major issue with respect to German exports of steel to the U.S., as well as China's steel exports, against which the administration has been reportedly speaking to other delegations about curtailing. Now, the most anticipated meeting will be with Russian President Vladimir Putin. Just yesterday in Warsaw, Trump criticized Moscow's actions in the strongest terms he has used as president. He urged Russia to cease destabilizing activities in Ukraine and elsewhere and its support for the Syrian and Iranian regimes, and to instead join the community of, quote, responsible nations in our fight against common enemies and in defense of civilization itself. So it'll be interesting to see their body language and exactly what comes out of their sideline meeting at G20.
Right, Jill. So what's in focus for next week?
Well, Friday officially kicks off the second quarter earnings season with the big banks set to deliver results, including Citi, JP Morgan, PNC, and Wells Fargo. Now, the S&P 500 has advanced just about 3% in the second quarter, and a new all-time high closing of about 2453 was set on June 19th. Since then, the index has declined to just about 1%. That was through Wednesday. It's declined a bit more since then with the sell-off yesterday. Now, this pullback comes just in time to kick off the second quarter earnings season. The companies that have reported earnings early have produced mostly better than expected results, boosting confidence in the 6.2% year-over-year earnings growth estimate projected by consensus. So companies like Micron, Lennar, Oracle, Nike, they all had strong reports when they recently announced quarterly results highlighting the consumer as a key contributor in the quarter, along with technology companies that are expected to have the best growth in the index after energy, despite low oil prices.
Okay, Jill, we'll sure keep an eye on those earnings coming out next week. For now, I have to let you go and enjoy the rest of the day. Thank you very much.
Thank you.
And enjoy the rest of the weekend.